trillion times 0 equals 0. You're better off creating a plan. That's what the strategy is all about. Creating that plan for you and your family to make sure that not only can you survive the chaos that we've already begun to enter, but even end up better on the other side of it. Undermines the central bank's price stability. Now, let us be clear on what they really mean about price stability. It doesn't mean that the prices stay the same. The prices go up slowly enough that the workers don't ask for money. So it's the highest level of inflation that does not inspire workers to ask for higher wages. Guess what? Price stability is out the window now, isn't it? Yep. And it changes the central bank's neutral interest rate, which frankly, both of these things are just in theory anyway. So what is a neutral interest rate? It's the level of interest that is neither accommodative, in other words, by dropping interest rates to 0 and opening up the floodgates of new money. That was we've said it so many times, it's accommodative. Come, borrow money, spend money. Let's create a whole bunch new money. Or restrictive, I don't like that interest rate level. It makes my payments too high. Therefore, I'm not going to be able to borrow. So it completely blows apart and changes what that neutral interest rate is. It doesn't really exist anyway, but neither one of these things really exist. Price stability. You need to be able to ask for a fair wage and get paid for the value that you bring to the table. And so you have to ask, as the Fed moves forward with different things, are they a friend or are they a foe? I know what my opinion is, but let's see what yours is. Because these are the constant headlines anymore. The great American consumer is navigating inflation and just may save the economy from a recession. Because this is a consumer-driven economy. And frankly, the whole world has been moving in that direction for a really long time. So let's just take a look at all those savings that they're talking about. Because this is the personal savings rate. And my goodness, it's lower than it was before 2020 hit, in the shortest recession in history. So the consumer, in order to maintain a standard of living, has been going through their savings. Of course, that's not all, because not only have they been going through all of those savings that, by the way, taxpayers gave them, and was that more about keeping the consumer alive or more about keeping the corporations alive and enabling people to keep spending money? Just to try and maintain a standard of living. When really, you got to work for things and you're going to have to pay this off. And with interest rates going up, well, we'll see how long that's going to last. I mean, and I'm not talking about the market pushing interest rates up, because that's going to last a whole lot longer and be a whole lot stronger. I'm talking about the Fed saying that they're going to keep raising rates. Yeah, maybe so. And out of all of this new debt, mortgages drive the increase in U.S. household debt to nearly $16 trillion. But the numbers that came in on housing sales in existing homes were down, I think they said 17% year over year. Maybe the housing bubble has popped. We're going to find out as time moves forward. But it's a lot more expensive. And when interest rates go up, well, the house prices were justified to go up because the interest was so low, so you could maintain the payment even though you're paying more for the house. Many people said that that didn't matter. Well, it matters now because there's a whole lot that's happened with that home equity. And the real question is, what happens if the real estate prices go down? Because there was a lot of home equity lines of credit that were taken out against these inflated prices. Do you remember in 2008, 2009, 2007, that People spent as much as they could. They pulled as much as they could out of the equity of their homes. And then all of a sudden, when the market went down, they were underwater in what they loaned or what they had borrowed. So we can't forget the lessons that we got from the great financial crisis, because frankly, that's when the system really did die, and it's just been on money printing life support. And what do you think is going to happen even further when interest rates rise? Because frankly, we know that Fed Chair Powell is committed, at least at this moment. I don't think this is going to last long. Honest to God, I don't mean the crisis. I mean the tightening. I don't think it's going to last long because there are too many other things that are happening. Right now, the Federal Reserve wants to control, maybe pop the real estate bubble and also the stock market bubble. But how much of that do you think they're really going to do? What we're seeing in the data out of the U.S. housing market today, and hey, I don't know that housing real estate bubble here in the U.S. is over, but you look at Canada, our neighbor, one of the world's frothiest housing markets, turned into a seller's headache overnight. House hunters from Toronto to small Ontario suburbs are changing how they navigate the tight housing landscape. One of the world's bubbliest housing markets is tilting from sellers to buyers with dizzying speed. And that was kind of what they were indicating when I was listening to CNBC this morning on the U.S. real estate market. And I guess they're not shopping as much at Target anymore because it plummeted the most since 1987. And I was there on Black Monday. And I'm seeing a lot of shades of that. Right now, people are making choices and they're prioritizing necessity purchases above discretionary purchases. You know, success is the best revenge. And we can do it if we stick together as a community and if we make sure that we are prepared. Everybody's starting to talk now. All the heads of the BIS and the World Bank and the WEF and all these guys are talking about the food crisis that's coming up. That writing has been on the wall. If you haven't done anything about it, make sure you do. And that's what Beyond Gold and Silver is all about, is the rest of the mantra. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done.